Okay, ladies and gentlemen, we're in the home stretch. We're going to call to order. We're not going to need a roll call, and I will mark everyone's attendance. I would like to say good afternoon. I'm Wisconsin State Senator Mary Felskowski, and I will be chairing this meeting today. I'm going to ask for a motion to waive the quorum requirement. Then a second. All those in favor? Thank you. So I'm also going to ask for a motion to approve the July 18th and the September 20th, 24 meeting minutes. Thank you. A second? And a voice vote? All those in favor? Aye. Again, thank you. Before we get started with our agenda, I'd like to remind everyone that we're continuing with the new testimony process that we introduced in November. Anyone in the audience here today who is not scheduled to speak on an issue can fill out a testimony slip stating who they are representing and what their position is on an issue. The slips can be found on the speaker table, and you can submit them to the chair or whoever is staffing the committee. In this case, it's Will, and then it will be incorporated into the minutes after the meeting. With that, we'll start with a consideration of readoption of the NCOIL Insurance Fraud Model Act. Per NCOIL bylaws, all NCOIL model laws are scheduled to be considered for readoption every 5 years, and if it's not readopted, it sunsets. You can view the model in your binder starting on page 283 and on the app and website. I note that more than half the states have adopted the model either in whole or in part. Does anyone have any questions or comments on the model? Yes, sir.
Yeah, good afternoon. John Barnes with Catalyst Regulatory and Compliance is going to testify 90 seconds.
This is on the insurance fraud? Is that, we're doing the Model Act for the insurance fraud?
I'm not going to testify right now then. No questions on the insurance fraud.
We can't wait to talk to you in the future, sir. Okay, with hearing none, I'll entertain a motion to readopt the model. Thank you. Then a second. Thank you. A motion, we'll have a voice vote then. All those in favor? Aye. Thank you, everyone. The model will now be placed on tomorrow's Executive Committee agenda for final ratification. Next is a presentation on inflation's impact on the insurance market. Some of you may recall that we had a presentation on this at our meeting last November, so it will be interesting to see what's changed since then and what the road ahead looks like. With us here today is Ed Luco of Ohio Dominican University. We'll hold questions till he is finished. Ed, thanks for being here, and please go ahead. So could Ed please come forward?
Hi. Thank you for inviting me here. I'm happy to be here. This is one of those situations where, and I think you've all heard of this before and maybe even had it happen to you, where your best friend is getting married and asks you to be the best man. Well, I feel like the best man today because he chose one of the biggest football weekends to get married, and that's so I'm here. I went to the University of Florida, and I wouldn't have minded missing one of their games, except that last week they actually beat LSU pretty badly, and so I thought, well, maybe there's hope today. And then I was on the faculty at Ohio State, and they played Indiana today. So, pretty big football weekend. I'm here instead. So, having said that, okay, there we go. Here is the focus of the Griffith Education Foundation. And while you're reading that, I'll tell you that Doug Rummel, who was here last year and did this presentation for you, was not able to make it because his newest grandson was coming to visit him for the first time. So he chose to stay there instead of coming here. So we'll talk about these 4 things that Doug started with last year as well, just in terms of the general level of inflation, has come down pretty significantly, and we'll have a slide or two as we go on that illustrates that. But the general level of inflation is coming down, but it's still going to have an impact on insurers as they go through the process of not only operating, but from a claim standpoint, the components that go into that are going to be affected by general inflation. And along with that, this idea of social inflation. Now, I think Doug mentioned that a year ago, but for those of you who weren't there, what we're talking about is how the legal side of claims has changed pretty dramatically, and we'll get into that as we go along, and it's having a pretty negative impact on claims and how they're handled. Wage inflation is another area. Now, and again, I'll have some slides that talk about this as well, but what we're seeing is that wages have been keeping up with inflation over the last, I'm going to say about 15 years that you'll see. And then finally, interest rates. And this has an impact on insurers from several different areas, and we'll get into those as well. So those are the four general topics, and I'll just show you this. Peter Drucker, who once said that the only thing we know about the future is that it will be different, compared predicting the future to driving a car down a dark country road with no lights while looking out the rear window. And I wanted to know when he was with my wife, because... But the point is that, I'll give you information. I cannot predict the future. So, general inflation. Here we have four categories of inflation, or four categories where inflation applies. And what it means is that the buying power of your money is dropping. You can't buy as much with the same amount of money because prices are going up. Now, when we talk about inflation, we mean that not all prices are going up. The general level of prices is going up. Now, you can see on the left-hand side where it says all products. That is, now this is a year ago when Doug was here. That is up at approaching 4%. And then we have food, we have energy, and then we have everything but food and energy. So we see that those costs then were going up pretty significantly. Well, here we are today. This is 1 year later. These are both as of September in 2023 and 2024. And you can see again, all items were down. It was 2.4% in September. Food was a little bit less than that. I think it was 2.2 or 3. Energy was down a negative 6.8%. So the cost of energy was dropping. And then on the end, we have all items except food and energy, and that's still right around 3%. So that's a significant change from these same categories a year ago. We're still experiencing inflation, but it's disinflation now rather than, or described as disinflation, which means continuing inflation but at a lower level. And then we have deflation as regards energy. So it's still having an impact, and it's still something that insurers and the industry is going to be concerned with. Again, this is one of Doug's slides from a year ago, and you can see here we're looking at the inflation rate. And this is all items here, and that takes us up to September of 23, and here it carries on. So we can see the impact of inflation dropping over this period of time to bring us to September of 2024. So why did your insurance rate go up this year? If this inflation is slowed down, you would think that maybe your insurance wouldn't go up, but we have these issues. There's an increasing number of natural catastrophic events. Now, here in Texas, you had one, and then there was another one that went up to Louisiana this year, this hurricane season. there were 3 that hit Florida, which is a higher number than normal. So there are 5 catastrophic hurricanes that hit this area this year. And of course, that has a huge impact on the results of the insurers, and then they're in the market trying to buy the things they need to fix the things that were damaged, and that's driving prices up as well. We have wildfires, not only in California and the West Coast, but this year we had wildfires in New York and New Jersey, which is pretty unusual, but that's due to the drought that hit my part of the United States, Ohio, and eastward. The cost of component parts for auto repairs is continuing to go up. Many of these things are being brought in from outside the country, but they're still increasing in cost, and those go into the calculation and promulgation of rates by insurers. And the cost of building materials, again, for these catastrophic hurricanes that are hitting, those amounts are in the billions. Whether we're talking about insured loss or all loss, we're still talking about billions of dollars that are going to have to be paid for somehow. And then finally, we have increasing wages. So all of these combine to increase the operating costs for insurers, and in order for them to be able to continue to operate, they're going to have to increase their rates to cover those costs. Now, here's the social inflation that we were talking about, and this is changing jury attitudes with larger sums that are awarded when the cases end up in court. And a part of that is this idea of third-party litigation funding. And this is quite simply someone being willing to pay the legal costs for an action that is being brought, with the idea that they're going to share in whatever the award that is issued by the court is going to be. And there's more and more of that going on. And then we have additional capital that's coming into the plaintiff's side. I don't know if any of you are from Florida or have been in Florida, and if you travel around there and you see the billboards, what do they say? Attorney Bill got me $700,000 and changed my life. I don't think I've seen any other kind of billboard in Florida when I've been there. So that's just telling people, call Attorney Bill, and he's going to get you a lot of money. And then we go to that third-party funding, and we end up with these kinds of awards, which have an impact on the rates that insurers are going to charge. The trust in institutions is declining, and I think it's continuing to decline, and this will have an impact as well in terms of how people respond when they have a claim. And then there are expanding legal concepts where more and more things are being brought and argued in court and being adjudicated on behalf of the plaintiffs. Here's a statistic that I found with regards to this idea of social inflation. Been around since 2015. Swiss Re, one of the larger reinsurers in the world, said that claims costs are up by 16% over the last 5 years and by 57% over the last decade. Claims costs. Claims costs drive up insurance rates, and when we see these kinds of increases, you know that insurance rates are going to be going up in an attempt to mitigate the impact. So related to these claims costs is the fact that we're dealing in a service, right? There's no tangible product. I mean, you get a flimsy piece of paper that gives you the legalese, but you're buying a service. When you have a claim, you expect that service to come into play. You expect the company to take care of you and make you whole. So with those wages going up overall in the service economy, the insurance industry is affected by that as well, because it is a service. It's not a tangible product. So here's the graph that I was mentioning earlier. This is the wage inflation, And you can see the yellowish line is the nominal increase. And the blue jagged line is the cost, the wage cost. And then the red one, and that's nominal as well, the red line is the real. Now, the difference between nominal and real is inflation. So the nominal cost is then reduced by the amount of inflation. Now, this goes back to 2005. That's a new base year for this calculation. So in 2005, they were all equal. And we can see what's happened, how over the course of the last 20 years, we can see that there's been a fairly significant increase in wages, and this is in the service industry. But even with those increases, on a real basis, there isn't much change. So people are getting wage increases, but because of inflation, their ability to buy the same things hasn't changed at all. So they may be getting more money, but they don't feel richer. And this is another one that gives us the same thing. This is service industry wage changes. This just gives it to us as it happened on an annual basis. And you can see again that it's trending upward apart from the last years or so up there. And so interest rates, the last one of those topics. The Fed has started decreasing interest rates, and the impact that has is that it makes it easier for companies to raise capital because their borrowing costs, if they're in the bond market, certainly is going to be lowered, and this gives them the ability to raise more capital. And as long as that continues, we'll see that as a benefit in terms of companies and how they're going to respond. As I said, the Fed seems to think they have control of it, so we'll see how it is going forward. I think that the likelihood is that in December there will be another decrease in the Fed funds rate, but I think after that it's going to be a wait-and-see attitude by the Fed to see where they're going to go and what they're going to do going forward. So, what can insurance companies do about it? Well, the first part of the first issue is recognizing that there is a problem. And there is a problem that inflation is causing for insurers as it relates to rates. So business planning and strategy is a great way for companies to address this issue. And you can see the steps that companies are going through, looking at reserving and financing and how they're going to make sure they have the appropriate amount of capital. Pricing obviously is a major issue for them, and capital and solvency are clearly issues they're going to be concerned with. The outwards purchasing and adequacy, we're talking about reinsurance protections that they're going to be buying as a means of smoothing out some of the large losses that they will have experienced, and making sure that they're able to continue to write the amount of business they want to at rates that are appropriate. And then exposure management, again, we're talking about this increase in catastrophic events, and this is across the country. It's not just in Florida or just in Texas and Louisiana or just in California. We're seeing more and more of these larger events occurring, and so companies have to manage their exposures. How much business are they writing? They have to aggregate that, take a look at it, then go back and look at their outwards reinsurance purchases to make sure that they have enough protection for the amount of business that they're writing in the event of one of those black swan events, if you will. And then they're going to be looking at expenses, not only wages, but all of their other expenses as well, as a means of trying to control what's going on. Now, this reserving, investment, pricing, and portfolio management are all a part of this strategic planning and business planning that insurers have to do. Reserving is clearly one of the major things that they are involved in. from the standpoint of their financial integrity. Their investment portfolio is something that they need to, because we all know, right, the people who make claims to insurers figure that they can fudge a little bit on how much it was because insurance companies have $10 more than God in their bank account, right? Everybody thinks that. From a pricing standpoint, they want to be fair and reasonable, but they also want to stay in business. So they have those two things that they're trying to balance. And then their portfolio management on the investment side is going to be important as well, because they need to be able to match the maturity of their investments with the times when they're going to need those funds to pay the claims that come along. Now, this is the last slide, well, the next to the last slide, but this is how the investment categories correlated to the CPI that Doug gave. And you can see that we run the gamut. There's some that didn't do very well and some that did very well. Now, from an insurer's standpoint, there are a lot of things that they're unable to invest in order to be in compliance. But those are some of the categories. And I couldn't find the information that he put together, so I found another slide. And I'll say this, I got here late last night and I went down to the bar and I saw a few of you there. Anybody who can read that didn't have enough to drink last night. But the reason that I have that up there is that you can see the swings in these various categories of investment, and that they all go below the line at some point. So this is an issue that insurers are going to have to deal with because they're investing funds constantly. So I think that's it. Yes. Any questions?
So Ed, I want to be sensitive. I know you have a plane to catch. Do you have time for questions?
I do. I have about 10 minutes for questions, and I'm happy to do that.
Okay, with that, we'll open it up to legislators. Questions for Ed? Okay, I think we're going to let you catch your plane a little bit early.
Okay.
Thank you for your presentation.
Thank you very much. It reminds me of my classrooms. Nobody has any questions. Thank you very much. Hey, thank you. It's going to be a good flight home.
Okay, up next, we have consideration of NCOIL Earned Wage Access Model Act. You can view the model in your binders on page 271 and on the website and app as well. We will be voting on this model today. Before we go any further, I'll recognize New York Assemblywoman and NCOIL Vice President Pam Hunter, sponsor of the model. Please go ahead, Assemblywoman Hunter.
Thank you, Madam Chair. Thank you to everyone who has participated in our discussions on this since we started last December. For all who've been involved, it's been a long year. I think we've made great progress on this model throughout the past year and have incorporated requested changes from both industry and representatives and consumer advocates. I think that we're ready for a vote today and looking forward to doing that. The timing is good because it's an issue where not only states have taken different approaches, but as mentioned during our interim meetings in September, federal agencies have also stepped in here with rules that will be litigated. So it's up to states to take action here, and NCOIL can be a big part of this. I do want to point out that one issue that was brought up during the interim meeting in September, there was a proposal raised about setting up a type of database that would be able to track these types of earned wage access transactions. I don't support that type of proposal at this time. I think it's something worth discussing in your states, but it's something that hasn't been included in any of these types of laws yet, and we've been discussing this for over a year. So to delay action on this model further for something that is unproven, I think would be wrong since, as I said, now is the time for us to provide states with guidance. I think this model is in a good place. I think that we have incorporated as many collaborations and conversations throughout this year. We've heard from everyone, so I encourage the committee to support it. Thank you, Madam Chair.
Thank you, Assemblywoman Hunter. We do have a few interested parties with us here today to offer closing comments on the model. Please keep your remarks to 2 minutes or less, and we'll hold questions until everyone is finished. We'll start with Earn In. Please go ahead.
Madam Chair, thank you. Derek Hine. I am with Catalyst. We are a multi-state government affairs firm here representing Earn-In today. Actually, I think that the Assemblywoman did a terrific job of expressing some of the same thoughts that I have today. This is not a perfect model, and I think there are a lot of things we would like to see different about it. However, we are extremely appreciative and really have a lot of respect for the process that NCOIL and the attention NCOIL has given to this over the last year. And I think in the interest of not letting the perfect be the enemy of the good, I believe we should probably move forward with this. And truly, the concept behind a model bill is to be a conversation starter in each and every state. And in those states' own wisdom and autonomy, they can elect to move forward however they wish, and we will be part of that process when it reaches states. So again, thank you to the Assemblywoman and to NCOIL, and I'll wrap things up there.
Thank you very much. Up then, we'll have Financial Technology Association.
Good afternoon, Vice President Hunter, Chairwoman Felskowski, and members of the committee. My name is Sarah Mamula, and I am Head of Government Affairs for the Financial Technology Association, an organization that represents approximately 30 digitally native financial services companies, including several leading providers of earned wage access. First and foremost, we want to commend and thank NCOIL for its thorough process over the past year, leading to the draft model EWA bill, and for actively engaging with stakeholders in its development. There are many items in the draft EWA model law that we believe will be beneficial to consumers and providers, including 1, the creation of a state licensing mechanism for EWA providers, 2, codification of EWA's consumer protective elements, including at least 1 no-cost option, no credit checks or credit reporting, and the inability to take legal action to collect payments except when fraud has occurred, and 3, inclusion of robust and appropriate disclosures. However, there are a few provisions in the draft we would oppose if introduced in states. The first is the requirement to disclose the full cost of the transaction as an annual percentage rate. Given that EWA products are short-term and do not involve interest charges, this would confuse consumers. We recommend providing the total cost in dollar terms instead, as this aligns with practices for non-credit products such as ATM fees. Finally, we emphasize the importance of allowing EWA providers to access lawful remedies against fraud or malfeasance, which the draft model law could further emphasize. It is crucial that fraudsters cannot exploit this non-recourse product at the expense of legitimate providers or consumers. Again, we appreciate NCOIL's thoughtful and deliberative process in drafting this model EWA legislation. We welcome the opportunity to partner with you in your states if you consider EWA legislation, developing a path forward that is both product enabling and consumer protective. Thank you for your time.
Next, we have American FinTech Council.
Vice President Hunter, Chair Felskowski, and members of the committee, my name is Hayden Cole, and I am Director of Federal Government Affairs for the American FinTech Council. AFC's mission is to promote an innovative, transparent, inclusive, and customer-centric financial system by supporting responsible innovation in fintech and encouraging sound public policy. AFC's members are at the forefront of fostering competition in consumer finance and pioneering ways to better understand consumer segments and geographies. We proudly represent the largest number of EWA providers who combined are serving millions of employees across the United States. AFC commends NCOIL for its thoughtful approach in drafting this model EWA bill. AFC strongly supports it. The American FinTech Council respects the tireless efforts that have gone into creating the model legislation and appreciates NCOIL's leadership. We look forward to collaborating to refine this legislation within state houses across the country. Thank you for your time and consideration.
Okay, John, now's your chance.
Well, thank you so much, Madam Chair. And my name is John Barnes, Vice President of Government Relations at Catalyst, not to be confused with Catalyst at the end there. So we want to thank you and the whole committee for the time today. Assemblymember Hunter, thank you for all the conversations. We greatly appreciate it. We know how hard you and this committee are working to develop a model that regulates emerging industries in your effort to ensure that important safeguards for both consumers and providers are included. First, we know that this has been a over 15-month discussion, and so we are late, and we understand that, but we will be back if Will let me, probably won't let me talk again on a microphone, but that's okay. We appreciate the value that NCOIL brings, getting to see so many legislators in states that we operate in already, 14 of them, and seeing a lot of old friends in one place. It's a great value for the industry to be involved with, to have those conversations. The reason we for the database amendment was that in the 14 states we operate, it helps regulate small dollar lending in the unbanked market space. And the EWA model as currently written, without a database amendment, would cause a gap in consumer protections and a loophole that would allow bad actors in this space to manipulate those laws, specifically as there are no limits on the number of EWA loans a person can take out, nor the necessary enforcement tools for regulators. The reason the database is so important is that EWA loans aren't underwritten and there's no credit check involved. So there's simply no way of knowing in real time, as we've seen in California, how many individuals are taking out these loan products and how many different providers they're getting them from. That said, we've spoken with the Assemblymember Hunter, Chairman Meredith from Kentucky, Chairwoman Carter from Michigan, Representative Bennett, Leader Lehman, Senator Tice, Senator Klein, and so many others, and we really appreciate the time and energy that you gave to this issue. We understand that the database is not going to be included today, but we will make sure that that amendment is included in the conversations as states continue to move forward with EWA bills and they're being introduced. We greatly appreciate the time today. We welcome the opportunity to speak with any legislators and any members of this committee as you plan for legislation to come to your state. Thank you for the time, and we will see you in 2025.
Okay, thank you, everyone. I'll now open this up to legislators. Are there any questions or comments? Representative Ferguson.
Thank you, Madam Chair. I'm curious about the Consumer Financial Protection Bureau's interpretive rule and where you see that going in terms of saying that it has to be a consumer loan. How is that changing the industry for your particular group? Do you see that standing long term, or are you moving toward complying with the rule?
I'm being put on the spot here. I don't know that I have an appropriate response, and candidly have not had an opportunity to consult with ERNIN on their position. I don't know if either of the associations want to chime in, but I think I'd love to have a follow-up conversation with you at the appropriate time, unless these folks have something to add.
The only thing that I would add is it is a proposed rule, so it's unclear at this time if it's going to be finalized before the end of this administration into the next. So it's something our association is tracking, and happy to continue that conversation with you.
I guess it was my, I guess I've talking to people, I've thought that a lot of the groups were scrambling to sort of meet those needs to try to incorporate the end where it actually they could make it a consumer loan into their products. Are you seeing that happening in the industry where people are trying to come up to, I guess, those standards just in case?
The only thing I can say at this time is that there are concerns with the proposed rule. I would have to check with our membership as a whole to get that further detail for you.
Any other questions or comments? Thank you, everyone. Hearing no further questions or comments, I'll entertain a motion to adopt the model.
Motion.
Second? Thank you, everyone. The model, then I'll ask for a voice vote. All those in favor say aye. Aye. Opposed? Aye. Aye. The motion carries. The model will now be placed on tomorrow's Executive Committee agenda for final ratification. Last on our agenda is consideration of the NCOIL Transparency and Third-Party Litigation Model Act. You can view the model in your binders on page 257 and on the website and app. We will be voting on this model policy today. Before we go any further, I'll turn things over to the sponsor of the model, Indiana Representative and NCOIL past President Matt Lehman. Please go ahead, Representative Lehman.
All right. Thank you, Madam Chair. And this has been a long time coming. I'll say this. Jack was just reminding me this issue first came up, I think, under the heading of lawsuit lending back in 2013. So it's been 11 years that we've been talking in this space. And I think you just heard from the last presenter on, or not last, but the issue of inflation, of the impact this is having on rates and the process. So this model itself that you have in front of you has been around for the past year. I think we've made good progress. I want to thank Delegate Westfall for his input and the conversations we've had with him and others who we've had a vigorous debate on this. And I think we're ready to move forward. I just want to maybe talk just briefly, if I may, about where we have finally landed. Our goal from the start was that we wanted this to be transparent and have guardrails. Well, I think we've begun to see that we don't want there to be bad players in this space. And the second thing is we don't want our judicial branch to become Wall Street. And when you look at the two paths we're on in this bill, there's a consumer path, which we've heard from the consumer lenders. Their lending is about survival, giving money to those who need to get to the end of the process. And so with their section of this, there's a lot of nuances, but it's basically the big changes have been the rate cap that's been put in and the disclosure of the existence of an agreement. In the commercial space, it's a little bit different. That has become a return on investment. That is where I want to get my money out. And so there's 4 things we've done there. One is we have said we want no bad foreign people or company or countries to be a part of this. We want you to have no access to the data. You don't get the seat of the table when things are disclosed that are proprietary. 3 is you have no say in the path of the suit. You can't say, I don't want you to settle because there's not enough of my return back. And the 4th thing is it's a disclosure of the contents of the agreement. So not existence, but contents in that commercial space. There's been some other changes in the disclosure, some other nuances to correct some conflicts. I think you're hearing some of the feds are starting to dip into this space. So I'll say this. I have been around here for 14 years, and I've heard some things in this process of this bill, particularly, that I've not really heard. And that is, if NCOL doesn't do X, if NCOL is silent on X, then it sends a message too. And I thought, this whole process is about constructing a foundational, strong walls, a strong roof, and send this to the states and let the states tweak it how they want. So we do have blanks. We do have spaces. We do have things that we are silent on. That doesn't mean we condone. It doesn't mean we condemn. It means this is the model that is a strong foundation. Go back to your states and figure out what fits in your state. We have, for some time, we have been debating this. I think this model is in a good place. Does it have everything I want? No. Does everything you want? No. And that's probably where I think we've ended up in a good place with this model. And I think we need to stay focused on this as a model and not let perfection be the enemy of good. And I think, again, it's going to come down to what you do in your state because you have every right to change whatever you want within this model. So with that, Madam Chair, I turn it back to you.
So thank you, Representative Lehman. I am going to be introducing an amendment. I reached out to Representative Lehman on this, and I want to thank him. We are broadening the definition of commercial litigation financing agreement, and I want to thank him for allowing me to broaden that definition. I think it's very important that we do that. So in front of you, you do have a copy of that amendment. I know Will did send it out yesterday also to the committee members. And if there's any questions on that, if you would like to review it, it broadens that definition. The amendment was distributed beforehand, was also printed out. It is before you. It's based on my conversations throughout this process. I think that the prior definition was too narrow, and this revised definition better tracks us what other states have done and captures more of these types of agreements. I think if we're developing model policy, it's better to send a signal to states and be expansive with definitions. And then if the states want, they can also always take a more narrow definition and approach, kind of tracking with what Representative Lehman said. I'll now recognize the co-sponsor of the model, West Virginia Delegate Steve Westfall, for any further comments on this.
I can get it turned on. Okay. Thank you, Madam Chair. I want to thank Representative Lehman to let me be co-sponsor on this. As a lot of you know, we passed this model plus a little bit extra in West Virginia this year. I think we were the first state to do it. As Representative Lehman said, we did hear about this in Boston when I was there. And I think it's important that you take us back to your states. Look at what we did. I think we got a better, like Representative Lehman said, this is the base model. I took a lot of the models from NCOIL and passed them in West Virginia. Never passed them word for word. We usually change them to how we need to do it in West Virginia. And I really appreciate everybody looking at it. I think the amendment helps the model a lot, and I really support the amendment. So thank you, Madam Chair.
Thank you, Delegate Westfall. We'll now hear from interested parties. I know this has been relayed to you before, but comments will be kept to 2 minutes or less. We'll start with Hilary Seguara of APCIA, then Paul Martin of NAMIC, then Jack Kelly, then Eric Schuler, then Will Weissman. Hillary, please lead us off.
Thank you, Madam Chairman. Hilary Segura, APCIA. We are very appreciative of the hard work and many hours that Representative Lehman, Delegate Westfall have put into this process. I know it has been a tiring and sometimes tedious process. The most recent draft of the model that was released on November 12th has moved the ball forward considerably, and we are very pleased with that. Chairwoman Felskowski, your amendment to the definition of commercial litigation financing, removing the reference to non-recourse loans, is an incredibly important addition. Given the evolution of the commercial litigation funding industry, we strongly support the addition of that language that's in the amendment. In the consumer disclosure in Section 7, while ideally we would have preferred to have mandatory disclosure of contents, in the spirit of compromise over the course of this process, APCIA, NAMIC, the U.S. Chamber, and ARC have worked together to try to find a solution and a compromise on some language. So if this model comes to your state and you're introducing it, we will be reaching out to you to seek some changes in the consumer disclosure section based upon the agreement that we've come up with on language that we think will benefit consumers alike. And then my final comment is on the charges section. We are agnostic. I know there's been a lot of debate on the rate caps. We're agnostic on the charges section, and leaving it up to each state to decide, we're okay with that as well. So I appreciate your time and all of the hard work that you have put into this model.
Thank you, Paul.
Madam Chair and members, Paul Martin, National Association of Mutual Insurance Companies. I need to get a few reps in saying that because it's been a while since I've been to the table for NAMIC. Representative Lehman has worked tirelessly on this for a number of years, and as we've had conversations out in the hall with many of you the last couple of days, we simply refer to it as TPLF, right? And that's accurate. But I was noticing this afternoon as I was looking over my notes, we sometimes omit the first word of the model, and that is transparency of TPLF. And so we think this bill, as is, with the amendment that Madam Chair has presented, is a very good start. This is something that we can take back to the states. We'll probably want to push for some tweaks here and there on the consumer side, but this has been a long time coming, and it's our hope that by making this more transparent, we can truly understand the impact and see where there are problems and when there are not problems. That is the good thing about transparency. So we appreciate the hard work of everyone who's worked on this.
Thank you, Jack.
Thank you, Madam Chair. I want to thank everybody for the opportunity to be here. I'm Jack Kelly with the American Legal Finance Association. We are the consumer litigation funders, the oldest association in the country, made up of the leading members of this marketplace. We have, since our foundation, worked very strongly for transparency in this marketplace. We believe that consumers need protection from bad apples. 12 years ago, Representative Lehman and myself and others in this room started working on this project. That day, after 2.5 years of debate, a vote was held in San Francisco, California, and the bill tied. The bill tied because everybody said, oh, I want this, I want that, I want the perfect. But what happened when we sought the perfect? We lost the good. Consumers weren't protected for all that time. Some states adopted law, but consumers didn't have the basic protection. I'm on the consumer side. I'm not on the commercial market side. We provide small amounts of money to people who pay their rent. This bill achieves that finally. Is it perfect? No. In all my years I've been in this business, and at the knickers of my father, he told me a good piece of legislation is when somebody looks at you on both sides and says, I'm not happy. And that's where we are today. We'll take these bills back. Some states will perfect them in different ways and do different things. But for the first time, we'll have a foundation to protect people from bad apples, to give them transparency in their contracts, to stop bad behavior and make prohibited practices for people who do bad things like give kickbacks and pay off people and steer these cases. And that's what we care about. So with that, I'd like to thank the gentleman from Indiana for his hard work on this, Mr. Westfall from West Virginia. Today we need to get this done. And what needs to be changed in the states, we'll do that individually as each state decides how they want to treat this product. With that, Madam Chair, I'd like to thank you for the opportunity to be here today.
Eric?
Thank you, Madam Chair. My name is Eric Schul. I'm the president for the Alliance for Responsible Consumer Legal Funding. Again, I'd like to thank Representative Lehman and those working on this. Just like Mr. Kelly said, our association supports proper regulation of the industry. Again, just a couple of parts of the piece of legislation that we do have some concerns with. One is on the charges section. We do thank that the fact that they did remove the reference to the Military Lending Act and insert it with a rate, but the way the language is currently drafted, it does reference usury, and our concern is that some states may take that as this product as being a loan, where several courts, and to include courts recently, have ruled that this product is not a loan. So that's why we would wish that would have been left up to the individual states. And again, as Hillary said too, the section on disclosure of it, the fact that it is an automatic disclosure and that the only part of the disclosure that is covered is just the request for the disclosure of the contract itself is still admissible, which we think would harm the consumer in the end. But again, we'd like to work with each individual if this comes into your states to make sure we have a good piece of legislation that everybody can live with. Thank you.
And last, Will?
I'm Will Weissman. I'm here on behalf of ILFA, which is the nonprofit trade association which promotes high standards in the commercial legal finance sector. Thank you for the committee for the opportunity to be here today. While there's many areas of consensus with what's in the Model Act, regrettably, ILFA cannot support the Model Act in its present iteration, and that's primarily because of Section 16, which requires the automatic, unfettered disclosure of the funding agreement. I think everyone needs to be clear-eyed about what that actually means in practical terms. That will cause extreme prejudice to the plaintiff because a commercial funding agreement contains the plaintiff's litigation budget. So you are telling the defense counsel, here's precisely how much money this plaintiff has to litigate a case. You will also be telling defense counsel, when you disclose that agreement, at each phase of the litigation, here's how much money the plaintiff and the plaintiff's counsel will make if we resolve the case at this stage. That is highly prejudicial and does irreparable harm to plaintiffs. No one in this room would ever suggest that defendants or defense counsel should turn over their litigation budget. I worked at an insurance company for many years. You would never, as an insurer, say, I will turn over my reserve information to the plaintiffs, right? You'd be laughed out of the room if you said that because it would be so harmful and prejudicial, and it's also irrelevant. And yet that's what the Model Act does. So for that reason, we're unable to support it. I think it's also to correct one misconception, which I heard repeated several times here today, which is that commercial litigation funders are contributing to social inflation and to escalating insurance costs. That is not true, and it's not true for a simple reason. Commercial litigation funders do not fund suits which are paid by insurance companies. There is not insurance for a breach of contract case. There is not insurance for patent infringement. There is not insurance for antitrust cases. We fund business-to-business disputes where the ultimate payor is the defendant. There is not an insurance product or an insurance company behind that. So I want to correct that misconception. So while we very much appreciate the opportunity to be part of this process, and I think there's a number of areas where there's room for real consensus, including with respect to disclosing that a case is funded, and putting procedures in place to ensure that funders are not exercising control, you will find broad consensus in my corner of the world for those pieces of the Model Act. but disclosing the funding agreement itself causes extreme prejudice. It's putting a thumb on the scale in favor of Defense Counsel, and for that reason, we're unable to support it. With that said, I very much appreciate the opportunity to share these views, and I've appreciated the collaborative process throughout. So if anyone has any questions, I look forward to them. Thank you.
Thank you, everyone. I'll now open this up to legislators. Are there any questions or comments from our legislators?
Thank you, Madam Chair. And I appreciate all the folks on the panel, and I do appreciate the work that's been done on this. I recognize it's been about a 100-year process, and so we're going to be done with it today, and I appreciate that, and we can all go watch football. I've mentioned this before to Representative Lehman and on previous meetings. I have some troubles that sort of echo IFLA's about what I see. The disclosures, to me, sort of tip the scales in favor of one side over the other, and I don't love that, but I also recognize that we do need some type of framework. So I appreciate that everyone's come to the table and has been willing to negotiate, and I would encourage legislators who are taking this back to their states to look at that section and determine what's best for you and your state. And with that, you may not hear me super loudly say aye in favor, but I also won't fight it too much. So I thank you for the opportunity to make my comments.
Rep. Overdorf?
Thank you so much. So I felt like I was having flashbacks when I was presenting this bill, and the panel was here and talking about disclosure, and it was a interesting presentation. I think that Delegate Westfall, Florida, might have actually passed it first, except that we had this whole disclosure discussion back and forth. That was single-handedly the largest and single most area of discussion and debate. That being said, I certainly don't want the perfect to be the enemy of the good, and I think this is a very good piece of legislation that we have in front of us. I will say that one area that I think that members should be aware of is the foreign disclosure portion. And specifically, when you look at Section 9E and looking at owns, the individual that owns or controlling interest, I think that we need to look at a percentage of ownership. And the reason I say that is in Florida, we passed a law regarding ownership of land associated with a foreign entity. And that ownership then was looked at as there was no percentage associated with it. So you might have an investment fund that has a foreign national that's part of that investment fund, and they may have 0.0001% of ownership of a parcel, yet that funding could not be utilized because there was a foreign ownership associated with that investment fund. Alternatively, that investment fund could have disclosed all of its members and all the association with it. So I just think that's an area to be aware of as you go forward for your specific states as to what percentage is associated with ownership. And again, the disclosure portion of it is really what killed it in Florida this past time around. I look forward to presenting it again this year and finding a way to work this forward, because I think there's a lot of good material within this overall legislation, and look forward to talking about it next year after we hopefully pass it. Thank you.
Any other legislators? Okay, thank you, everyone. In terms of procedure, we'll first need a motion to adopt the amendments that have been made to the model since the 30-day materials, and that includes the amendment that I am offered, then a second, then a voice vote. Remember, only members of the committee can vote. So with that, I would entertain a motion to adopt the amendment.
Madam Chair, I move we adopt the amendment.
Second? Okay, with that, all those in favor of adopting the amendment, please say aye.
Aye.
Opposed? The amendment is adopted. I'll now entertain a motion to adopt the model as amended.
Madam Chair, I move we adopt the model as amended.
And then a second? All those in favor of adopting the model as amendment, please say aye. Aye. Those opposed? Sorry. The model is adopted as amendment. Yeah, I know. Thank you, everyone. The model will now be placed on tomorrow's executive committee agenda for final ratification. Is there any other business that people would like to bring forward? Is there any other business for this committee? With that, I have a couple of announcements. The Women's Caucus will be meeting at 5:30 in the lobby level Camino Real room. And there will also be a hearing up next in the Budget Committee in this room in about 5 minutes following the adjournment of this committee. Hearing no further business, I will ask for a motion to adjourn. A second? Second. All those in favor of adjournment? This meeting is adjourned. Thank you, everyone, and we will see you in Charleston.